What's up, Mortgage Coach community? Dave Savage here, and today I am with Rick Scherer out of Boston. How you doing, buddy?
What's up, man? Always amazing to be with you.
It's always amazing to be with you. I always get fired up. I say I would take notes, but I'm on the road, everybody. I'm traveling. I'm in Seattle today, speaking at an event, and I am going to do a quick interview with Rick because I'm trying to help mortgage professionals stop playing checkers and start playing chess. And what I'm trying to say there is that most loan officers, they just quote rates and fees, and they play this transactional, very linear, very simple game, and deliver pretty much transactional value. And the loan officer of the future, and by the way, the future is here today, needs to be an advisor, and that doesn't mean just deliver a total cost analysis. That means really ask great questions, connect and lead that customer to help them build wealth with real estate, to help them achieve their financial goals faster. So Rick, I've interviewed you countless times. Anybody that loves the interview that we're going to do right now, there'll be a link down below to one of my favorite interviews with Rick, big interviews. Walk us through, we call it the hopes and dreams conversation. You may call it something else, high trust selling or whatever, but walk us through the conversation you're having and do it. I know you've got a story to share and a strategy to explain. Walk us through some of that with the story you have.
Yeah, I mean, first of all, I just need to credit you for the constant reminder that you're giving to the whole community around, we're sitting on this database that, they already know us, love us, and trust us. So stop spending too much time getting new deals and really dive into your database. And so, that's really where my example here comes. It's a client that actually closed today. So this is a presentation we did about 25 days ago. And, it's all around the annual review calls that we've talked about quite a bit, and you've highlighted great deal. And if people aren't doing them, man, I just tell you how much hundreds of thousands of dollars you're leaving on the table. Reason why I say this is a client, Dimitri, who I had at a 3.875% 30-year fixed. That's not someone that shows up on a spreadsheet that says, oh, you're at this rate and I can bring it out of this rate, right? This is someone that I got in his world, and although he had a 3.875 rate and I brought him to a 4.875% rate, we saved him $700 and we'll see here in a second, $700, maybe $50 a month, at least for the next 3.5 years. After that, it goes down to $450 a month. And so, yeah, it's just a real demonstration for you, Dave, and what you're getting out to the community around stop getting, get in deep with your past clients, and you can actually really make a difference for them.
So let's do this, Rick. Pull up that total cost analysis. While Rick is pulling that up, I just decided which video I'm going to put down below. It was the interview where you explained how you're getting into these annual review conversations. So I'm going to put a LinkedIn article that I wrote, helping you actually get into conversations like the one Rick got into with Dimitri. And I'm going to put a link to one of the video interviews I did on how Rick gets those conversations. So let's just say, hey, you're doing annual reviews, you're talking to a past customer. Give us a feel for the conversation and how you uncovered, the goals that he had and the solution that you provided, and then walk us through what you delivered to him.
Yeah, so I uncovered the fact that he had $25,000 out on a home equity line of credit at a rate of 8.7%, I believe it was. Let me just see if I can go in here real quick and find that information. But so he was at a rate of 3.875 on a 30-year fixed, 8.7% on a home equity line of credit. He also had a high interest car loan that he wanted to get rid of, and then it was a high interest car loan. And then he needed some cash out as well. So, we took him and brought him from that situation to really, we had one that we broke even from his payment, his mortgage payment that he's paying to the mortgage payment he's paying now was break even. But then when you take in the amount he was paying off and the monthly payments he was saving, ended up being about $708. He did decide to go with the 30-year fixed option. So we talked about what his current situation was around his mortgages and his tax deductibility. So that, that 8.7 was no longer tax deductible. The student loan in his circumstance wasn't tax deductible. So there were some things in there that allowed us to do a cash out refinance. Yes, go higher in mortgage interest, but now wrapping that into a tax deductibility and opening up his cash flow by $708.
Got it. And when you walk him through the total cost analysis, what, I know I see like 20-year, 30-year, what was the conversation like as you went through the TCA?
So, a couple of the questions that he had, and it took him a little while to get around the fact that he was moving his interest rate up to 3.875. And, I said, so, hey, will be a really good thing right now is to let's get your your financial planner on the phone. I know you work with him quite a bit. Let's walk him through this as well and just get his buy-in from it. Which, by the way, I have coffee with him next week because he'd never seen something like this. So we went through it with him, and he said, you talked to him and said, this is a no-brainer for you to get to your end goal of where you want to be from a debt and a cash flow basis. So we went through it, and then he was like, well, you know what? I think he was 7 years into it. And so then there was a conversation of, well, does it make sense to go backwards, or does it and get more cash flow, or does it make sense to go to a 20-year mortgage and certainly still save a bunch of money? And between him and his financial planner, they came up with the $200 every month that they'd be saving was more worthwhile for their strategy than to go to a 20-year mortgage. So that was something that they came to. And again, the reason why the CPA or the financial planner wants to sit down with me is he's never been able to explain this type of strategy to his clients in a way like this. So, that's when he asked for the meeting, because he could very clearly understand what the true actual cost to his clients were.
Got it. So guys, the takeaway here is make sure you're having the hopes and dreams conversation. Find out hopes, dreams, and goals. Make sure you're uncovering all the debt that they have, not just mortgage debt. And then the big takeaway here is make sure you're collaborating with the financial professional, because when you show them this total cost analysis and the way you help families make mortgage options, every CPA, every financial planner is going to go, wow, this is unique. This is valuable. You help my clients go from confusion to clarity. It's going to help you win that business. So great job on collaborating with them, and then getting a meeting. And I hope it turns into a new referral partner.
Yeah. One other quick point about this too, Dave. I mean, think about it. What's my alternative if I didn't have the total cost analysis? Right? It's sending him a rate at a 1% higher than he's currently paying, and trying to make sense of it all for him to clearly understand it. Like pad paper, like email, it's man, when you can clearly spell out the savings and the money in their pocket. And even I was going to do the reinvestment strategy as well, because that's what their plans was to do. And I can only imagine if I didn't have this, how that conversation would go. And I guarantee it probably wouldn't be closing today, and really mean a new deal for me. So,
yeah. Well, and the other thing is, if you didn't have this whole mortgage review process and this tool to help net it out for families, there'd be a lot of loans that wouldn't be closing. So everybody on the call, or everybody listening to the video, the takeaway is do annual reviews. Not only are there a lot of incremental loans, but there's a lot of referral partners in there. And then remember, you're getting leads to give back to your referral partner. So there's a lot of ammunition to make you the premium, core partner for that planner. I mean, this is a hallmark strategy. I am looking for more mortgage strategies. If you're watching this, there's a playlist called Mortgage Strategies, and this is just one of the mortgage strategies in that playlist. And if you're new to the business, I want to make this so it's a great place for you to learn how to not just be a transactional loan officer, but how to be a mortgage coach, how to be a mortgage strategist. So if you got value, like it below. Also in the description where I put the link to the other articles and the other video with Rick, there'll be a link to this sample total cost analysis. So check it out. And then Rick, let me know when you have another mortgage strategy that you want to share with everybody. This is awesome. And I want to do more interviews like this where we just walk through strategies.
Love it, man. Appreciate you.
I appreciate you, brother. Any last words before we wrap it up?
Thanks for what you're up to, man. This is, like I said, had this not happened, I probably wouldn't be closing a loan today. So thanks for doing what you're doing for us in the industry, and keep crushing it, man. Thanks.
Thanks, Rick.